Ever tried juggling 21 things at once? Me neither. Sounds like a disaster waiting to happen. What if I told you there's a way to finance 21 condos, just one loan? No juggling, no chaos, just one simple solution. So here's the deal. I just helped a client take $1 million cash out of his 21 non-warrantable condos. They're worth about $75,000 a piece. And that's tax-free, by the way. Check with your CPA. And we did it with something called a blanket loan. Get it? Blanket loan. That's why I'm wrapped up in this thing today. And it's not just for staying warm. It's the perfect way to visualize how this loan works. It's one big financial blanket covering multiple properties at the same time. So if you're an investor drowning in multiple loans, or your portfolio is just too big for a traditional bank, stick around. This video is going to show you how blanket loans can save you a lot of time, money, and a ton of paperwork. All right, I had to ditch my blankie because it's like 91 degrees and humid here today. So hopefully you guys got the point. Let's break this thing down though. Blanket loan's exactly like it sounds. One loan that blankets multiple properties under one umbrella. Instead of dealing with 21 properties and 21 loans or more or less, however big your portfolio is, you're dealing with just one loan and one payment. And of course, much less stress as well. And here's the kicker. Blanket loans aren't just for purchasing properties, they're for refinancing. And that's actually where we see them most, is people taking cash out of a portfolio they've already owned that's gained a lot of equity over the years. And that means if you currently have multiple mortgages and you want to bundle them all together and simplify things, we can do that. And I know in our example, we use condos, but these work for single family homes, townhouses, duplexes, maybe even a mobile home if we're feeling frisky, or it can be a mix of all of the above. And that's what makes this type of loan so powerful. It's flexible and scalable. But here's something most people overlook. The key to getting a blanket loan is something called the data tape. In fact, a lot of these investors seem like they got a data tape fetish. They're like, where's the data tape? Give me the data tape. So a data tape is basically a glorified spreadsheet or a rent roll even, you could call it. I've got a copy of one here, but basically it's got your name, estimated credit score at the top. It individually lists each property, and it's got the address for each property, bedroom count, amount of renovations you've made. The rent obviously is very important. So there's a lot that goes into it. It can be a pain in the neck, but with AI, you should be able to blast through this. And if you'd like a copy of a blank data tape or data tape, depending on who you ask, I'm going to include a link in the video description, send you one completely for free so you can see what that looks like, fill one out for yourself. If we go back to the example of my client earlier with the 21 non-warrantable condos, for each one, if we did them individually, we're looking at like a $50,000 loan. So there's not a lot of investors that are, chomping at the bit to do a $50,000 non-warrantable condo loan. But with the blanket loan and a clean data tape, we were able to secure $1 million in funding for him. And that's the power of this strategy. Let's get into how blanket loans work. It's a single loan, multiple properties, like we said. Typically, investors want to see 5 or more properties in the blanket, and some have a cap of, or want a minimum of 10 plus. Collateral, all the properties secure the loan like one big giant blanket, like we said. Release clauses. This is actually pretty cool. So if you are wanting to sell maybe 1 or 2 of the properties, a lot of them will have release clauses where you can sell them off and then pay the loan down by a proportional amount. Refinance or purchase. Like we said, you can use this to either buy a loan or refinance an existing portfolio that you already have. Works across different property types, single family homes, condos, duplexes, and even a mix of all the above. And some of them will even consider manufactured homes, probably not single wides, but it's a possibility. So who should use a blanket loan? Real estate investors, especially those with 5+ properties, or maybe somebody that's looking to buy into a portfolio of properties. I was thinking about our example. This portfolio of 21 condos is actually about the price of a single family home in Los Angeles or the Bay Area. So maybe if you're thinking about buying an investment home, just one house in California, maybe you consider buying in another state and buying a portfolio of properties. Developers, could be used by developers that are developing multiple properties or maybe subdividing land. Buy and hold landlords who are ready to scale, or perhaps just refinance for better terms or simplicity. Just a quick data point here. Investors that use blanket loans can save up to 30% on closing costs. For instance, if you're getting 21 appraisals, like in our example, you get a little bit of a bulk discount for getting them all at once. So that's just one example of how it could save you on the closing costs. All right, let's get into some quick pros and cons. Pros: fewer payments equals simpler financial situations. Lower fees, only one appraisal, one closing, less sets of docs. Easier to scale and leverage your equity. And it may allow you to pull cash out of the entire portfolio at once. All right, and the cons: higher down payments or LTVs on a refinance, Depending on what part of the country you're in, it could be 25 to 30% of equity that they're looking for. It's got a cash flow. If you default, you risk all the properties in the blanket. Fewer lenders offer them, so you'll need a niche broker. Blanket loans are powerful, but you got to be strategic. It's not a beginner loan. What is the lender going to need? The data tape. I know I mentioned this earlier, but just to be abundantly clear, the data tape is the most important part of the transaction. It's not a fancy name. It's literally just a spreadsheet. Probably take you 30 minutes to fill it out if you focus on it. If you need help filling it out, let me know. But it needs to include the property address, purchase price and current value, the rent roll or expected income. Usually there's a spot for each unit for the rent, any existing debt, insurance and tax expenses, and of course HOA dues if we're talking about condos. Without this puppy, you might be able to get some informal quotes, maybe something over the phone or a generic email. But if you want a real letter of intent, no lender's going to give it to you without the data tape. And I wouldn't trust the quote either without the data tape. And like I said, I'll email you one for free. If you can't find one online, just check the link in the description and I'll send it over to you. All right, let's wrap things up here, pun intended. Blanket loans are perfect for investors with tricky situations or even properties scattered all over the place in different property types. One payment, one loan, way less stress. But here's some things to remember. You can use them to purchase or refinance. They work across multiple property types, even with mixed portfolios. And most importantly, you're gonna need a rock solid data tape or data tape. These investors love them, they gotta have them, so no tape, no deal. So if you're watching this and you're thinking, I've got 10 plus doors and this sounds perfect for me, you got to do two things. Number one, subscribe to my channel where I break down niche topics like this where maybe only 7 of you guys will benefit from it. Number two, drop a comment below if you've used a blanket loan before or even if you need help filling out your data tape. And hey, if you've got 21 non-warrantable condos, need $1 million, I might know a guy. Thanks for watching, stay cozy, and I'll see you guys on the next one.